Hey everyone, welcome to another video. So in this video, we'll try and understand a very important amendment under the Foreign Exchange Management Act, which will benefit a lot of exporters of goods or services under the GST law. Now on 13th of November 2025, in FEMA Act, there was a very important change. As far as realization and repatriation of sale proceeds or export proceeds is concerned, you had a time limit of 9 months from the date of invoice. So if I'm in the business of exporting out goods or services, and today if I raise an invoice, I need to ensure that under FEMA, I realize my export proceeds within a period of 9 months earlier. Now these 9 months have been done away with, and there's an added benefit. 6 more months have been added, and now it's been extended to 15 months. So which basically means that today, if I'm raising an invoice for export of goods or services, then I have a period of 9 months plus 6 months, 15 months in total to realize the export proceeds and be compliant under the FEMA Act. Now, this extension of the time limit of realization and repatriation of sale or export proceeds has given a lot of benefit for the exporters of goods or services under GST. Let's see how. So under GST, there are two important rules for export of goods or services. One is rule number 96A and the other one is what we look at it later, that is 96B. Rule 96A talks about something called a LUT or letter of undertaking. Now normally when you're in the business of export of goods or services, you have two options under GST. One, you can pay GST when you export out goods or services and then later claim a refund of the same from the government, or you export out goods or services and you don't have to pay IGST or whatever GST that applies on the export if you file something called a LUT. So if you are exporting out goods or services, you should ensure that before exporting out, you file the LUT and then export out goods or services. There's no requirement to pay IGST. So LUT is like a bond or an agreement with the government stating that if you fulfill certain conditions of export, then you don't have to pay IGST at all, and it's good for the department of the government because you're bringing in foreign currency. So let's take an example where a person in India is exporting out goods or services to US and he is going for the LUT option. Even for supplies to special economic zone, you have an option to take LUT or don't take LUT, whichever. So for exports out of the country or special economic zone, you have these two options. So let's say in this example, he's exporting out goods or services and he's choosing the LUT route wherein he's not paying any GST and is going to file an LUT or a bond with the department. What he will bind himself or what he will agree with the department is basically that if suppose he has received the payment in advance but has not yet exported out goods or services. So payment is received in advance in foreign currency, but you have not yet pushed out the goods from your factory for export. So the goods are not exported. Then the binding clause with the LUT says that once you raise the invoice, plus 3 months, plus 15 days, time limit is there for you to not pay GST if the goods are not exported. But even if the goods are not exported after 15 days from 3 months of date of invoice, the LUT says that look, the limiting period is over, pay GST. So you are, as an exporter, entering into an agreement with the government saying that if I don't export out goods within 15 days from 3 months of raising the invoice, then I will pay GST. If not, I can avail the LUT option and not pay GST. My goods are exported on time. And suppose your goods are exported or services have been delivered, but for some reason you have not yet received the export proceeds or payment from the foreign customer, then you are entering into an agreement with the government saying that either from the date of raising the invoice within a period of 15 days of that 1 year from raising the invoice or 15 months from the date of invoice, I will bind myself to pay GST if suppose I cross this time limits. So in other words, if you are in the business of export of goods or services, you should ensure that you file the LUT, definitely if you don't want to pay GST upfront. But the binding clause in the LUT says that if your payment or the foreign receipts have not been received within 1 year from the date of invoice and 15 days hence, or 15 months from date of invoice, then you need to pay GST on the same. Otherwise, you can avail the LUT option and stay with the non-payment of GST option. So 1 year from the date of invoice plus 15 days you have time, or 15 months from the date of invoice. If you exceed these time limits, you need to pay GST. That's what the bond or the agreement or the LUT, the undertaking of the department, says. Earlier this was 9 months, now it's been extended to 15 months. So today if I'm raising an invoice, I either have a time of 1 year from the invoice plus 15 days, that's 12 months and 15 days, or I have a period of 12 months and 3 plus 3 months, so basically 15 months from date of invoice. Earlier it was only 9 months. So because of the extension of the time limit in FEMA, because of that amendment, you have an added number of months that is available to the exporter when once he's filing the LUT. You have some extra time for you to receive the payment. If you exceed 15 months or this particular 15 days from 1 year of invoice, you need to pay GST. That's what the LUT agreement with you says. The other rule is Rule 96B, which talks about refunds received. So if you are in the field of export of goods or services and if you avail the LUT option, definitely whatever GST that you incur on your purchases, you will not be able to utilize it anywhere, because on your outward sales, there's no GST, you file an LUT, there's no need to make a GST payment. So you tend to claim a refund of the unutilized credits or unutilized GST tax. So 96B says that, okay, you have got a refund of the unutilized ITC credits, or if you have not gone for the LUT option but you have paid IGST and later you claim a refund, if you've got that refund also. So once you get the refund, still if the payment from outside India or the foreign receipts or the sale proceeds are not realized within 15 months from the date of invoice, that is, if you have got the refund already of whatever unutilized ITC or the IGST on your export, but you have not got the payment within 15 months from the date of invoice, you need to deposit back the refund amount to the extent of whatever amount of sale proceeds not realized. So to the extent of unrealized amount, you need to deposit the refund amount back to the department, and whenever in future you realize the remaining amount or the full amount, you can claim back the refund amount. So it's basically a case where you cannot get an added advantage. You need to pay off the refund amount if some amount remains as unrealized at that point in time. So that's what Rule 96B says. And earlier it was 9 months. Now, of course, it's been extended to 15 months. You have some added advantage of 6 more months in this particular case. Well, I hope I was able to make things clear through this particular video and establish a link between the change in FEMA and the benefit under GST law. If you like the video, you could show the support to us by hitting the like button. If you want more videos of these on a regular basis through way of notifications, you could also think of hitting on the subscribe button. Till then, I'll see you guys in the next video. Take care and thank you.